Hey everybody, this is Richard. So I'll be doing the review for the last 3 weeks of trades. And this will be a pretty quick video. I want to basically just show you the 4 put spread trades we had and the 2 day trades. Overall, it was a really good 3 weeks for us. We closed up about 11.5% or $1,721 per unit traded. So again, it was a really good run for us. Now, if we look at the trades a little bit closer, we'll see kind of the breakdown of what all occurred. Now first I'd like to talk about the put spreads. Now we did have 4 of them. This was the first one that triggered on the 11th. And what happened was, and this was a Monday I believe. So this was a Monday that we got into the trade, and what this will do is it'll hold until the next expiration. In this case it was Wednesday, which was over here. So on this day we placed the put spread trade. The market sold off the next day. And then the next day even more, although it rallied a bit, but it ended up being a loss for us because on Wednesday expiration, the S&P closed below our short put spread. And so what that ended up doing is causing a loss for us. Now the nice thing about the spreads though, again, is that our losses are minimized, or they're contained at least. So if we were to buy the futures here and just hold them, we would have taken pretty big losses as the market sold off and would have had a pretty big stop out. The spreads allow us to stay in until the expiration because our max loss is defined. Now the other put spread that we had, or the next one we had, was on the 21st. This was on a Thursday that we placed this trade. And so we held until Friday, which was the next expiration, and then it ended up exiting with a loss, or allowing the options to expire with a loss. Now on Monday, we got into another spread trade, and this one though actually worked out well for us. So we got in. The next day the market was down, so again, if we were in the futures, we would have got stopped out here, but because we were in the spreads, it allowed us to hold on until Wednesday expiration, where the market did pop, and we ended up having a full profit on that trade. So this was our, at this point, this was our 3rd spread trade that we had, and it was a profitable. And then our next spread trade, the 4th one, occurred on the 27th, which was a, let's see, that was a Wednesday as well. So the 25th was Monday, Tuesday, Wednesday. So we got in this one on a Wednesday, held on Thursday, where the market rallied huge. And so most of the gains actually were captured on Thursday, but we do hold those until expiration, which means we held until Friday, which was right here. And these ones expired worthless again, which is our best case scenario for the spreads. So we had 2 losers and 2 winners. Okay, let's look at the day trades now. So the day trades did really good, especially the last week. Now, we really only had 2 trades though. We had this one here, which was a stop out, and this can be relatively common. I mean, the win rate on this algorithm is about 50%, which I know is nothing that sounds great, but when you see the potential when we win, you kind of see why this works so well, because when we get into the trade, our stop is really tight. It's about $350. So we're risking $350, but when we're right, like we were on the 27th, we can make up to $2,500 or even more. And so we are risking, in essence, $350 to make up to a couple thousand, on the way up even to 3,000 in some cases. So even though our win rate is about 50%, this trade is actually one of the best algorithms we have, because when it wins so much. And so those are great odds, and this is a great algorithm. But we really had 2 trades. We had the one on the 18th where we got stopped out. The market gapped up, we got in, we got stopped out, and we were done. It's not fun, but it happens. The other trade was on the 27th, and notice what happened here. We got in, and originally the market sort of traded sideways for a while, and I did a video on this trade specifically where I talk about it a little bit more, but the market kind of traded sideways. It really felt like we were going to get stopped out because our stop is so tight. It's about $350, which would have been right around in here. And so, but the market did sell off here, but didn't hit it. Came, I think, within $100 of the stop, but didn't touch it. So we stayed in, and the market kind of rallied a bit, then it sold off a bit. Eventually the announcement came from the Fed, and the market just took off. And so we were able to hit our target and get out of the trade with a nice win. So that kind of sums up how we did though. Basically we had 4 spread trades, 2 were winners, 2 were losers, but then 2 day trades, 1 was a winner, 1 was a loser, but the winner was pretty massive. It was about a $2,500 gain on that trade. But yeah, just remember that trading futures does involve substantial risk of loss. It's not appropriate for all investors. And of course, past performance is not indicative of future performance. If you're not a customer yet, then go ahead and fill out one of the forms on the website, and we'll be able to show you kind of what the Geronimo Trading System is. But really, it's just a fully automated trading system traded through NFA registered brokers. And we'd love to show you more and walk you through the different algorithms it trades, which is really the day trade long, that's this one here. Day trade short, which I haven't showed you, that's because that didn't have any trades, which is a good thing because the market was pretty much rallying the entire previous 3 weeks. But then also the spread trades are the third algorithm that it trades. So thanks again for watching, and have a great day.